And the question I always ask when we look at this dollar rally, I go to this one chart and it's on my Bloomberg right now, and essentially it's got this big red line across the top where 100 is, because over the last couple of years, as the DXY punches up to 100, it comes back down again. What's to say it's going to punch through this time and stay there?
Well, that's a good question, and I think the reason you observe that phenomenon is that as you have a big move in the dollar, as you documented that we did, it tends to concern the Fed. Especially if it's occurring for reasons outside the U.S., because it lowers our exports and it lowers inflation. And so I think part of the reason why we've not sustained a move above 100 is the Fed then starts to pull back the pace of rate hike or rate hike expectations. This time might be different. I know those are dangerous words. This time might be different because the move in the dollar now is really reflecting more optimism about U.S. fiscal policy and U.S. fiscal stimulus. And in that case, there would be less reason for the Fed to pull back on the pace of rate hikes. And so we'll learn a lot at that December Fed meeting. We'll get a press conference from Chair Yellen. You know, as of the last meeting, they were only indicating probably 2 hikes next year. At most, and so they'll be able to provide some useful information to the markets about whether or not a post-Trump Fed is going to hike more aggressively.
When we talked about sort of the BOJ and the level they want for the yen, we always talk about how it's the rate of change, it's not the absolute level. Well, if we use that in terms of the Fed and the U.S. dollar, you would think the rate of change has been so extreme over the last few days that that would impact the Fed rather than just that absolute level of 100 on the DXY.
That's a good point, and I think the rate of change is relevant for a lot of countries, certainly in emerging markets, certainly for like Japan and Switzerland, which have carry trade factors. I think it's probably a little bit less relevant for the Fed. I really think they're looking at the level, especially the level which is already at an elevated level. So this is not a recovery from a depressed dollar.
The flashpoint for the ECB, though, they've got their weaker euro, but traditionally we talk about a weaker euro and lower yields. They've not got that right now. In fact, spreads are a lot wider than they were this time last week. How do those two offset each other, and how does that shape ECB policy?
It's a great point, because what this week has shown us is that there may be 180 countries in the world, but they're basically only one bond market at the 10-year point. And so all yields globally have gone up because of views about U.S. fiscal policy. In the case of U.S., we'll get the stimulus. In the case of Europe, they're getting the high rates and not the stimulus. And so I think that is a factor for ECB and Bank of England and potentially BOJ thinking. It reinforces our view that the ECB in December is going to have to indicate a continuation of their QE program and a very, very accommodative policy.
So Rich, what is President Trump's policy going to be on a strong dollar? Because ironically, it strikes me, if he's really concerned about keeping jobs in the United States, the stronger that dollar gets, the more we import from places like Mexico. And that's, in a sense, exporting jobs. Yeah. So what is his position going to be on whether a strong dollar helps him or hurts him?
Well, I think that's an excellent point, because we had a strong dollar policy officially under Rubin in the 90s. We had a strong dollar in the Reagan administration, which I also served as well. And certainly a lot of the folks around President-elect Trump are folks that think there should be a strong dollar. I think, as you point out, there's a range within which that makes some sense. If you get a big move in the dollar, as we did in the 80s, where it really starts to hurt the export sector, you know, it'll get attention. And that's why this is going to play out. Yeah. For those of us who look at markets and the economy, fascinating, because at the same time we're getting the Trump economic agenda in 2017, we're going to be talking about a new Fed chairman, and a new Fed chairman who may well be more hawkish than Chair Yellen. So there's a lot for markets to digest over the next 15 months.
There's a whole lot of political risk as well. The spillover from this to the conversations around Europe. We caught up with the Deutsche Bank chief economist David Folkerts-Landau a little bit earlier on Bloomberg Television. Take a listen to what he had to say about Italy.
My worry is that as we come closer to the referendum date, and as Trump's changes make themselves felt, that you're going to see external investors pulling back completely, and instead of getting 100 basis points, we're going to go to 4%. And then you're going to have an impact on the banking system in Italy and the rest of Europe. So for me, Italy is the country that I would worry about as a flashpoint for additional European stress.
Rich, we've got a series of flashpoints. We've got an Italian referendum, French election, German election after that. We're getting a little bit too ahead of ourselves, the idea that these are severe flashpoints, because if we've learned anything so far this year, it's that Brexit happened, yes, that was a surprise, but the market fallout wasn't huge. This has happened, and so far the market fallout hasn't been big, at least on the equity side. So when we see event risk, does it mean it has to be a huge downside risk?
Well, and that's exactly right. We've had, by some accounts, 2 black swans in the last 5 or 6 months, and they turned out to be 1 or 2 day events in terms of risk off. And so I think what it does tell us is that we're in a more uncertain world with two-sided risk on both sides. So you're right, a riskier world is not necessarily all downside risk, and I think right now we've seen a market reaction that there is some upside as well that gets priced in.